Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. Today we're going to look at a new one I have not looked at before, Nucor Steel. This is out of the materials sector. Now before we get too far in the video, if you could do me a big favor, it really does help out a small YouTube channel like mine with the YouTube algorithm. Hit all the buttons down below, the thumbs up, the subscribe. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell as well. Share with anyone you think that might find value in the content. And one more, watch time. If you could watch the videos to the end, watch time is one of the metrics that the YouTube algorithm looks at. So again, all of that really does help out a small YouTube channel like mine, as well as dropping a comment. Let me know what you think of Nucor Steel. Is it one you're watching? Is it one you're selling? Maybe you're part of the downturn today, or is it one you're just holding, waiting to see what's going on with it? Would love to hear from you in the comment section below. Now this is the vested interest stock screener. This is the criteria that we will be running through. It must meet 5 of 8 to make it onto my watch list. If it was a bank or another company like an insurance company out of the financial sector, we add in price to book. You can use price to book for any company. Just don't blindly use one. One fair value price to book is really for banks and other companies out of the insurance or out of the financial sector. All right, back over to Nucor. You can check them out on their homepage, nucor.com. That's nucor.com. That is their homepage where I pulled this information from. Nucor is North America's most diversified and sustainable steel and steel products company. Our team is forged around a vision for leading our industry by providing unparalleled customer care, building trusted partnerships, and creating sustained value. And that's what they really provide. The steel, whether that's steel from recycling products. You can see here merchant bar and rebar. So for construction, engineered bar, beams, plates, plate steel, sheet steel. So for like cars, whenever they press the hoods and that sort of thing, that would be from sheet steel. Cold finish, data systems, decking, fasteners. Great, so your screws, your nails, that sort of thing. Grading, same thing if you're running over a highway grade or something like that, might be from them. Highway and agriculture, insulated metal panels, joists, metal building systems, overhead doors, high performance doors, so steel metal doors, pilings, pipe and tubes, rebar distribution, there's rebar again, rebar fabrications, solar structure for the solar industry there, towers and structures, so for large commercial projects, warehouse racking systems, wire products, and again, they are in the recycling sector, excuse me, as well. So everything around steel, really, Nucor is involved in, again, out of the materials sector. Now, the reason we are taking a look at them, down 6.07% on the day, big drop on the day. We are talking about Nucor Corporation, ticker NUE, out of the materials sector, closed out the day at $117.17. 52-week range as low as $97.59, as high as $170.52. They are close to their 15% of their 52-week low and closer to their 52-week low than their 52-week high, but they need to drop under 112 to be within 15%. Market cap of $27.036 billion, a beta of 1.75, so they are more volatile than the overall market. You might be able to use that volatility to your advantage if this is, excuse me, one you're interested in buying. PE ratio, price earnings ratio, seems a little elevated at $20.31, but you might want to compare that to other steel companies. EPS, earnings per share, at $5.77. Earnings date coming up sometime here in July between the 21st and the 25th. For dividend, $2.20. They are a quarterly payer. We'll see their payment per share here towards the end of the video. Current starting dividend yield, if you were to buy them, 1.8%. Ex-dividend date, June 30th. So coming up at the end of the month here, it looks like it says that they paid out ex-dividend date June 30th, dividend date on 5/12. That doesn't make sense. Something's messed up with that, unless that was their last dividend and then their ex-dividend date is for the one a couple months from that. So looks like they paid their last dividend last month in May, and then their next ex-dividend date is at the end of the month, but then you'd have to wait a couple months to get it since they just paid out in May. One-year target estimate of $145.37 according to Yahoo Finance. I'm not affiliated with Yahoo Finance, but they don't see it quite getting back to its $170.52 52-week high. So not quite back to its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 1.74%. We compare it to the current 1.8, or over here at forward 1.8, same number. Since it is slightly higher than their 5-year average, that speaks to undervaluation, and just slightly undervalued according to dividend yield theory. Really, probably closer to fair value right now. But payout ratio is 38.45. I like under 75%, so much lower than I am willing to accept. Now, going back in time here, looking at their free cash flow, and I like growing free cash flow because they can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, raise that dividend over time, which we want companies to do, and even hold some cash on the balance sheet if they so choose. But again, going back here to December 2022, you can see 8.1 billion in free cash flow, down in 2023 to 4.8 billion, down again in 2024 to 806 million. Trailing 12 months looks like down again, 521 million. They are headed in the wrong direction. That is a steady decline over the last 3 years. Keep in mind the trailing 12 months, since we're only in the first part of June, does include a lot of 2024 numbers. Repurchase of capital shares, they are pulling shares out of the market. 2.7 billion in 2022, 2023 down to 1.5, 2024 2.2 billion again. Trailing 12 months looks like they're continuing that trend at 1.5. There's my dog out there. But again, trailing 12 months does include 2024 numbers, so we'll have to wait and see what that shakes out to be. All right, jumping over to stockanalysis.com. This is another source I go to for information. I am, again, not affiliated with stockanalysis.com, not affiliated with Yahoo Finance, just two sources I go to. I do recommend more than one source for you to look at as well. Any sources that you want, doesn't necessarily have to be these two, but I recommend that so that you're looking at information. You want to make sure the information you are looking at is accurate and up to date. Gives you a back check. 2, if not 3 sources is what I recommend. Typically, I look at 2, and then if I see some discrepancies between the 2, I might pull a third source as well. Now, they do call this, out of the 8 analysts that have taken a look at this, a strong buy with a low estimate of $135. Currently sits lower than that. So if it came back up to their low estimate, that would represent a 15.38% increase from where it currently sits. Average estimate of $157.88 would represent a 34.94%. That's a little bit higher than the 145 we saw with Yahoo Finance, but not terribly so. And then if it happened to hit their high of $200, that would represent a 70.94% increase, and you could collect that 1.8% dividend yield if you were to buy them now. Now, jumping into statistics, I like to look at return on capital employed to see how well the company is reinvesting its capital back into itself, making those acquisitions, reinvesting all of the things they can do with that free cash flow. And I like 10% or better. Now, they are at 7.17%, so a little lower than I'd like. And their EPS growth is not listed. I typically like 5% or better. I throw in revenue. This is actually a part of more of a deep dive whenever I find a company that I'm like, but I do throw it in here if it was listed. Neither EPS nor revenue are listed. Again, for EPS, I like 5% or better forecasted over the next 5 years. All right, quarterly payers we mentioned before, 38.98% payout ratio, well under that 75%. Dividend growth of 3.81%, so they are growing their dividend. Been growing it for 52 years. Buyback yield is positive at 4.78%, so they are pulling more shares out of the market. If you see a negative number, that means they are issuing more shares, and even if they are buying them back, they are not buying back more shares than they are issuing. So they would be diluting you. So this, they are making you more of a shareholder as they buy back their shares. You want that to be positive. Shareholder yield is positive at 6.64%. Again, you want that to be positive. They do pay out off schedule on February, May, August, November timeframe. Going back in time here, September 2022, they announced a 50-cent dividend. December 2022 here, they raised it up to 51 cents. December 2023 up to 54 cents. Most recent raise was December 2024 up to 55 cents. And if they are going to maintain that dividend growth of 3.81%, I would anticipate their next raise will be December of 2025. All right, let's check back with the screener, understand the business. They are a material company, steel provider, everything around steel, really, it looks like, for the construction industry, for several other industries out there. They did not have growing free cash flow, so no check there. Growing dividend, yes, 3.8% is nice dividend growth. That should be above inflation most years. Dividend payout ratio is well under 75%. It's under 40% actually, so check there. Dividend yield theory says they're potentially undervalued. It is not quite within 15% of a 52-week low. No check there. Return on capital employed was only at 7%, so not above the 10% I like. And they did not list anything for EPS, so can't give them anything for that. And we're not looking at price to book because it's not a financial company. 4 out of 8 does not get them onto my watch list. What do you think of Nucor Steel? Is it one that you are watching? Is it one you're holding? Is it one that you are selling? Maybe you're part of that downturn. Again, would love to hear from you down in the comment section below. Let me know what you think of the video. Let me know what you think of Nucor Steel. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below on your way out. Don't forget to share with anyone you think that might find value. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. Gambler's money should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel of a certified financial advisor.